The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, the United States is falling behind on central bank digital currency development, according to the Atlantic Council. The U.S. think tank has launched a new CBDC tracker, database, and interactive toolkit as the number of countries exploring CBDCs has exploded, more than doubling to 81 countries over the past year. Joining us now is Atlantic Council Senior Fellow Julia Friedlander, who has also testified before Congress this week on CBDCs. Welcome to the show, Julia. So in your testimony, you said of the countries exploring CBDC development, the United States is furthest behind in its work on digital currencies. So why is that the case, and what are the consequences of falling behind?
Thank you so much for having me today, and it's really a pleasure to be able to share the painstaking work that my team has produced over the past couple of months on the CBDC tracker, culminating, as you mentioned, in our testimony earlier this week in the House of Representatives. To answer your question, to start off, I think it's because, the U.S., given its global role as financial standard setter, has to be rather cautious in how it deploys a CBDC. This isn't a small niche market. Managing a small currency that is not interchangeable around the world. In fact, it's quite the opposite. So I think the caution reflects, Chairman Powell's feeling, first of all, that, you have to be careful with how you deploy the global reserve currency in new form and fashion. And also there are questions about whether the Federal Reserve Act allows him to create a CBDC and might need further authorization from Congress.
Hi, Julia. Crypto wasn't even developed by central banks. It was developed from the ground up. Stablecoins, a part of the crypto ecosystem, that was developed basically from the ground up. Why not let stablecoins do their job and innovate and do whatever? I mean, Tether, for all its faults, won't spy on me, when I do transactions, as far as I know. So why do we need CBDCs? Why can't we just let stablecoins do things?
There are a bunch of questions out there, and I think what we would argue is that there is an ecosystem that allows for stable coins and for central bank digital currencies to work in parallel. Now, from our research, we see that countries are interested in deploying CBDCs for a variety of reasons. In the Bahamas, it's for financial inclusion after natural disasters with thousands of islands, getting instantaneous payments from the central government to individuals at lightning speed. Other countries are frankly concerned that stable coins or other crypto can affect monetary policy. And that's in countries like Sweden, which manage autonomous currencies that are tightly pegged to the euro. So, there are questions about how this will affect broader monetary policy. In the US, the consensus, and I think what the testimony shows, is there isn't quite consensus, and there certainly is a lot of political disagreement across the aisle about how to manage this. Is that we can potentially reduce the speed of transaction significantly. It takes sometimes days to conduct an interbank transfer and a week to conduct an international interbank transfer. So CBDCs can offer an instantaneous remedy to that. The other thing that we think is really the most effective use of a CBDC as opposed to a stablecoin is in relationship between the federal government when it is issuing direct payments, stimulus payments, particular federal aid programs to the individual. It's hard within our regulatory environment to see that being effectuated by a private service provider.
Hi, Julia. Welcome to the show. I tend to agree with you that I don't see why CBDCs and stablecoins can't coexist, and I also don't see why the U.S. should just kind of further develop this. But one question that I've actually never seen addressed is how much would it actually cost the U.S. to develop a CBDC, right? Because some people are like, okay, well, just try it out, just see if it works. But I'm not clear about how much this would cost the U.S. government to do.
I can't tell you that either. I mean, whether it's in men and women power or in the investment in technology, we haven't necessarily seen estimates either. And that's actually a nice hint for us as we expand our tracker. Maybe we should start making estimates on that based on what other countries have experienced. First and foremost, it's a question of what the Bank of International Settlements, the time and research, just basic research power and the cost of that to design and implement a CBDC CBDC. And then there's the time it will take to pass necessarily regulation and what regulators with the SEC and the Treasury Department are going to have to put into this. And then how we're going to partner with the private sector. I think we understand there's a misconception out there in the United States that a CBDC is going to operate in a vacuum between the Federal Reserve and the federal government, and there's going to be no role for the private sector there. In fact, we see it as the opposite. We think, based on the tracker and the experiences of other countries, there are a couple who tried to do this without using financial sector intermediaries, and they realized they couldn't do it. It was way too much of a burden. They didn't have the customer interface. They didn't have the infrastructure. So for the rollout of something in the United States, we're going to have to work closely with U.S. financial institutions. And so that's also a private sector cost that we'll have to face.
Julie, can you just put into very simple terms for people who don't follow this closely, like what is the worst that could happen if the U.S. falls behind? I mean, is it losing its the dollar status as the global reserve currency? Like, if you could just put this in the simplest language possible, like what really does the U.S. have to lose here?
Over longer term, then there will be threats to the U.S. as a reserve currency. As we testified earlier this week, we were trying to tap down concerns that this was coming in the near future. Given the depth and breadth of U.S. financial markets, as we all know, this isn't nearly in the offing. But what we see is, because so many countries are moving forward with this so fast, is the risk of a fractured financial sector and international movement of money, and that countries that don't necessarily share our interests in privacy or in data protection or in quite frankly in the monetary stability are going to perhaps build models and proliferate models that do not serve the U.S. interest. So that's part of the reason why we're trying to light the fire under actors in Congress. It doesn't mean that you have to launch a U.S. CBDC. We just have to use our regulatory power and our position in the global financial system and in the G20 to help issue in standards that are reflective of the Bretton Woods system and the commercial banking system as we currently have it. And that is, I think, our strongest argument for U.S. involvement here. Obviously, we don't see it happening. China's internationalization of a digital yuan is in absolute baby stages. But there is, if we don't move forward and try to show a model for this for the international community, which is, by the way, asking us for it, then over time there is a significant risk that actors like China are going to be able to make their model very appealing. And that's not in the interest of U.S. consumers or the U.S. government.
Julia, we have sizable portions of the global population who won't even take a vaccine to save their own lives. What makes you think they'll adopt the central bank digital currency?
That's a good question, a good point. And I think that there's the communication that we can use is to say, look, this is going to get you your money at lightning speed. If you have a rent turnaround, it's not going to take days and you're going to worry that a check is bouncing. You're not going to have to worry that about about bank codes and other nitty-gritty stuff that when you have you're in dire financial straits, quite frankly, and is not going to be the first and forefront in your mind. Plus, we have to think about a large percentage of the U.S. population, relatively large, given what the United States is, that remains unbanked due to their risk profile. So taking all that into account, we could prove the efficiency of a CBDC as a payment system. But you're right to point out that there could be a suspicion of a central authority issuing payments. But as we saw coming out of the distribution of the CARES Act, for example, that many people who needed the money didn't get it for weeks or months. Right, and that's a significant argument.
We have to wrap up, but I just want to ask you one quick last question. You mentioned that if the U.S. doesn't act, other countries will define standards like privacy, like cybersecurity. China is on the forefront of CBDCs. They have controllable anonymity in their current currency, and so I just wanted to ask, how private is their digital yuan?
I think it's safe to say that based on standards that we would say private, not private at all, and that it is designed to provide access by the state to the payments of Chinese citizens.